The soybean market is sliding to the downside ahead of Monday's crop production and supply and demand reports from USDA. Traders are trying to anticipate potential supply-side changes and are taking to the road for the info. And stocks are ripping to the upside this morning. Volatility is blowing the roof off. We'll find out what it all means for interest rates.
Live, moving ever forward via Farm Journal Studios, this is AgriTalk. This morning we'll begin with a conversation with Mike Miner from Professional Ag Marketing. Then it's Bob Elliott from Unlimited Funds. I'm handsome newsman Davis Michelson. Now, here's the host of AgriTalk, Jeff Flowery.
All right, Davis Michelson, thank you so much. Welcome to AgriTalk. Glad that you are joining us on this Thursday morning. I'm telling you, yesterday was yesterday's Farmer Forum conversation. I've gone back and listened to some of it. Yep. You guys go listen to it. If you haven't heard it yet, agritalk.com, the AgriTalk app, your favorite podcast platform, wherever you want to go, listen to that Farmer Forum. There are some thoughts, some ideas, some concerns that I think everybody needs to just kind of target, I guess, get up to speed on these issues, because if the more you understand about how things outside are influencing what your business is doing day to day, the better the chance you have of managing the risks that you are facing. So give it a listen. And I'm telling you, the timing on getting Bob Elliott in here from Unlimited Fund this morning to talk about where next on interest rates really couldn't be better after the conversation that we had with Tim and with Frank yesterday on the Farmer Forum. It's good stuff, dude. I was more excited about the Farmer Forum after listening to it than I was when we were doing it, dude.
Absolutely. Well, and sometimes that's the case. You know, we go through, but then there are certain episodes that we just got to go back and listen through to really soak it in. And I would agree. This is one of those. It's worth another listen, everybody. Give it a listen. Yep.
70 degrees and overcast here in Northeast Iowa this morning. 70. Okay. Yeah.
We're 74. Got a nice, steady, light rain. Looks like it may continue for most of the day. Is that right? Oh, no, it's going to. Well, yeah, we'll have a little bit here and there throughout the day. It's gorgeous here right now, dude. This is like my favorite kind of weather.
Yeah, and that rain is definitely something that you guys have been looking for down there. It's gotten dry in northwest Missouri.
Yeah, and you know, the irony is yesterday I took the time to finally get out there in the yard. You know, I had the shirt off and everything. Very manly scene over here. Yeah. You know, edging a little bit on the lawn and just making it look real nice. And then the last thing I did is water the flowers because I didn't know when it was going to rain again.
And here it comes. And here
That's all I had to do.
That's right. That's right. All right, man. We've got a big show coming. We're going to talk with Mike Miner, who is out on the road doing a little bit of crop touring, and then Bob Elliott at the bottom of the hour. All right, let's get to the news.
We'll start with the National Weather Service short-term outlook. Debbie is forecast to spread excessive rainfall, strong winds, and thunderstorms up through much of the mid-Atlantic and central Appalachians and the Northeast through Saturday morning. Excessive heat concerns continue across the deep south while cooler air settles over the central U.S. through the end of the week. Monsoonal storms persist over parts of the southwest, Four Corners, and High Plains region. Chip, further, go ahead.
Well, there are tornado watches across most of eastern North Carolina and into southeast Virginia this morning.
Okay. Further afield, expected cold temperatures next week could cause frosts and damage crops in areas of Argentina. This, according to the Buenos Aires Grain Exchange. They're saying the wheat crop is most at risk there in Argentina.
Yeah, let's get a few days closer before we get too worried about frost in Argentina.
For sure. Well, Japan issued a tsunami warning following a 7.1 magnitude earthquake that struck the southern island of Kyushu. No casualties have been reported. Chip, the odds of a U.S. recession by the end of the year are now about 35%, according to J.P. Morgan anyway. That's up from about a 25% chance at the start of July. J.P. Morgan Bank cited a sharper-than-expected weakening in labor demand. That's kind of what we've been talking about, too, watching that labor market, Chip.
And we will jump into the details with Bob coming up at the bottom of the hour.
Well, Chip, overall consumer credit rose at an annual rate of 2.1% in June, totaling $8.9 billion. Now, that's below the expected $10 billion, according to data from the Federal Reserve. The figures suggest a potential slowdown in consumer spending, though household debt is not yet a significant concern. Household debt, not yet a significant concern. That doesn't sound like what we've been told over the last several months, Chip.
Yeah, affordability and issues, putting groceries on credit card.
Yeah.
That kind of stuff is the conversations have turned that way, yeah.
And in a separate report from the New York Fed, they highlighted a rise in credit card delinquency rates. Now, that's more than 30 days overdue. That's up to 9.1% over the past year. That's the highest level since 2011. Total credit card debt reached a new high of $1.14 trillion with serious delinquencies, and those are more than 90 days overdue. Those serious delinquencies are at 7.18%. That's the highest in 13 years, Chip, so there's definitely some trouble out there.
Definitely.
According to Gas Buddy, gas prices are expected to average around $3.38 per gallon for 2024, with potential fluctuations depending on various factors. The Energy Information Administration, or EIA, also expects gas prices to remain lower than in previous years, despite potential increases in crude oil prices. What's the WTI doing today? Yeah, we're up slightly here. Let's go out to the October 74.84, up 67 cents on the day. The December at 73.29, up about 55 cents. A quiet day there. Mm-hmm. Senate Ag Committee Chairwoman Debbie Stabenow announced that progress on the Farm Bill has stalled due to Republican resistance to compromise on SNAP and climate funding. Republicans are advocating for significant increases in crop subsidy spending, cuts to SNAP funding, and the use of climate funds for soil and water projects that do not mitigate carbon emissions. An $800 million grain export facility project planned by Greenfield Louisiana LLC in Wallace, Louisiana, has been canceled after extensive delays in obtaining federal permits. Chip, the project, which had been in the works for over 3 years, faced significant opposition from local community groups and encountered repeated delays from the U.S. Army Corps of Engineers. The primary reason for the cancellation was the prolonged permitting process. In the past 24 hours, the United States has struck targets in Houthi-controlled Yemen, including a ground control station, 3 anti-ship cruise missiles, and 2 drones, according to the U.S. Central Command. And finally, Chip, President Vladimir Putin's invasion of Ukraine has led to an unexpected Ukrainian military incursion into Russia's Kursk region, involving up to 1,000 troops over 3 days. This is the first time since WW2 that a foreign army has invaded Russian soil, Chip.
Wow. All right, Davis. Hey, thank you so much for the update on the news. We are going to take to the road and find out what the corn and soybean crops are looking like. We've got Mike Miner from Professional Ag Marketing coming up next here on AgriTalk.
Our name says it all. AgriTalk. What more do you need to know?
Welcome back to AgriTalk. I'm your host, Chip Flore. Glad you're with us on this Thursday morning. Like I said, we've got a production report coming up on Monday, supply and demand report. The USDA is going to include survey-based information from farmers in its production report. So, for the national average corn yield, farmer input via the surveys will have an influence on the national average and the state-by-state yield estimates for corn, soybean, spring wheat. Cotton is included in that. They are not doing field observations in August. That is something that was discontinued, I don't know, like 4 years ago. something like that. They are saving the field observations from their objective yield plots until the September crop production report. So the observations that we are making out in the field as farmers and as some of the crop scouts out there it's the first look into the fields out there and to see if the crops are really doing what we think they might be doing this year. Mike Miner, Professional Ag Marketing, has been out doing tours for the past few years, and he joins us right now. Mike, it's good to talk with you. How are you?
I'm doing well. How about you, Chip?
Doing just fine, just fine. So what are you doing this week? Where are you at?
Yeah, so right now we're sitting at a gas station in eastern Iowa here right now, but we started out closer to Sioux Falls there on Sunday, and we traveled straight down we bounced back and forth between western Iowa and eastern Nebraska, and then we worked our way through Missouri into Illinois, kind of the bottom half of Illinois and Indiana, and then got out into Ohio, and then we started driving back through the northern side of those states, and got through Cedar Rapids last night, and now we'll work our way back up through kind of northern central Iowa here to try to get a better determination of where that wet area really starts and kind of stops and where the real heart of it is, Chip.
Right. So you're getting back close to home in Laverne, Minnesota, right?
Oh, we got a few hours left, and then we're home free.
Yeah, good deal. Good deal. Well, as you get closer to home, that might be the area that is that people are wondering the most about, right?
Exactly. So what we did this year was we broke apart into two separate tours here. I had one tour from the office go out, and they really took a deep dive into Minnesota and South Dakota and North Dakota here. That'll be wrapping up today. And they'll have a little bit better information, especially in Minnesota, because I think that's probably going to be one of the states that has the widest variety of yield estimates, I think, personally.
Yeah, yeah. Well, the expectations for the Eastern Corn Belt, Illinois, Indiana, Ohio, they're certainly high this year. Did you find some evidence over there to support that?
So I would say since day one, when we got out of basically Nebraska and Northwest Iowa, the entire crop all the way through basically Missouri, Illinois, Indiana, and Ohio, those would be the main states that I would say we had good to excellent field conditions in every field we drove past. And this is my 9th year on the tour, and there's very, very limited amount of years that I've been able to see that throughout the fields. And each sample we went and pulled, there was no real disappointing factors. Sometimes we would see some things like this last field we went through where maybe it got a little bit too wet at a stage where they had to put a few more pounds of N on, but that was about it that we found for problems. Or maybe planting was split up a little bit too much in Ohio. Some really early stuff looked okay, and then some stuff maybe got planted a little late, but it all still looked good. As long as we get a good finish and no late problems in this growing season, it should all come out okay. So this, in general, I think that eastern crop, like if you told me Missouri or Illinois or Indiana or Ohio, if you told me any one of those was going to be a record yield, I wouldn't be surprised at all, Chip.
Wow. Okay. Over in Ohio, even in a couple of weeks, the third full week of August, when Pro Farmer is out doing the tour, it's not unusual for Brian Grady to see some fields that have recently pollinated. Is that kind of what you saw over in Ohio, maybe even eastern Indiana in the late planted areas?
Yeah, really on the tour here, we've only seen a handful of fields that have been dented pretty decent. In Ohio, it was interesting because the one field they took us in was planted almost a month after the other one, just down the road a couple miles. And that didn't even have purple silks on it or anything yet. It was still pretty white. So some of those fields had a pretty good ways to go yet in maturity.
Yep. All right. Well, I know that the days start to drag together when you're out doing these tours, Mike. So go all the way back to the start of the week. What did you see when you pulled out in eastern Nebraska, western Iowa?
Yeah, so northwest Iowa there, they had a really rough stretch where it was just way too much water through the months of May and June after they got planted. I mean, some of those fields, it took a month for those to come out of the ground. And so it looked really rough back home at the start, through May and June when that stuff was coming up in that northwest Iowa area. And from that time until now, through the month of July, the crop's really shown some improvement, really came along pretty decent. And you would find some fields that just stayed wet too long where water had sat for a day, and that made a really big difference. But otherwise, if it was a pretty well-drained field, it was planted on time, stuff looked really good. And they caught another couple inches of rain here over the past couple weeks. That was really key. I thought those fields looked better than expected, but it was still, slightly below average, probably for northwest Iowa. But it wasn't as bad as what a lot of those farmers had seemed to really want.
Okay. But slightly below
and
average,
slightly below average. But for that area, I mean, it was wet. So that was kind of expected there.
Okay. What were you going to
Nebraska, when we got in.
Yeah.
I was just going to say Eastern Nebraska that same day. I mean, north to Eastern Nebraska all the way down to Omaha looked superb. It was very, very good. And, I mean, crop conditions were fantastic. And especially through that area, you can tend to get on the drier side most years.
Yeah. And with the cool temps that they've got right now, Mike, when you start talking about Eastern Nebraska and that far western Iowa, when it comes to this time of the year, if you can give the corn crop some cool temps, it does way better than people expect, just because it's taken some time and adding some weight. Any disease issues, insects that we need to be aware of?
The corn-on-corn stuff, obviously pressure from a lot of northern rootworms in that area, some rust and things like that, but nothing too extreme. Tar spot, I think, has been talked about a lot in our area recently, and from what I've been talking to people, because it's not a problem we have in South Dakota yet. We had a little bit by Yankton last year for the first time, nothing spotted this year. But out east, we did find some tar spot fields in Ohio and whatnot. And it's just very fascinating because, you could spray a field 4 times. The input costs go incredibly higher for that. So trying to narrow that down and try to see what's really out there for that disease, I think, is a growing concern for many, and that wouldn't be surprising. But otherwise, a few here and there, but nothing consistent throughout the United States from what I've really seen.
Okay. All right. Very good. Talk to me about the bean crop. What's the potential?
Well, beans are made in August, right? We've had a pretty good start. We, from our point of view, there's not a ton of inconsistencies. It's about the same as the corn. It looks really good from the road. It's all going to depend on how this soybean crop finishes out through August here. But some of those states like Minnesota and north central Iowa, the beans don't like wet beet, right? So that is going to play a little factor. I thought they've looked really good most of the whole trip. I have no real complaints. Through Nebraska and western, kind of northwestern Missouri, that drought seems to maybe be creeping into those areas a little bit from Oklahoma and Kansas. So we did see some lighter shading in that area, but it wasn't too bad, I guess, for most of the trip here on the soybeans.
30 seconds left here, Mike. Are you leaning up from 181? Is that what I'm hearing in your thoughts?
Yeah, I have a very easy time choosing 181. I struggle to really get it above 183. Once I start plugging these numbers in, you really got to reach for it. If they do get a 183, I think it's maybe because we're not seeing Minnesota get brought down enough. But my summary is that we've seen good to excellent crop conditions the whole way through, and this year will be a great reason to really look at the extreme top-end yield technology, and if we can achieve that with perfect weather this summer.
Good stuff, Mike. Good summary right there. Thanks. I appreciate your time. Be safe.
All right. Thank you, Chip.
Mike Miner, Professional Ag Marketing. Welcome to this edition of the Soy Checkoff Check-In on AgriTalk. I'm Chip Flory. Joining us now is Patrick Giberson, Soy Checkoff farmer leader from New Jersey. Patrick, welcome. How are you?
Oh, pretty good. Can't complain. Things are a little tough here, but we're getting by.
Okay, well, glad to hear that. Tell me about farming in New Jersey. How's your season been?
We started out wet, kind of like everybody else. We got stuff in the ground, not quite on time, but not too late either. And then we've kind of dried up. We've been hit or miss with rain, and not enough to get anything back in the soil profile, just kind of enough to mitigate some stress at the moment.
Okay. So how far along is your corn and soybean crop right now?
Soybeans are pretty well along, the ones we got in early. And I say early, probably the second week in May. Corn first week in May, that's at brown silk now. We typically run from about 105 to 112, 114 day corn.
Okay. All right. Very good. Patrick, the board met last month. Sounds like it was a very productive meeting. I'm interested in what was decided on the infrastructure and connectivity efforts there at USB. What investments have got you excited?
Oh, well, at this point, there's so many things going on with us right now. There's a lot of excitement, no matter which way you look, whether it be my work group or other ones. And a couple of the big ones that I'm sure, and I think you've had this interview before, is the firefighting foam, CF 1122. We also are doing a partnership now with DeWalt for bar and chain oil that's across 1,300 Home Depots at the moment. These are, the big ones that are being talked about. So that was, a couple of the things that we've discussed. And the other one, too, that I don't think has really got a lot of press yet. We're dealing with a company now. They're trying to make a fire-resistant hydraulic oil from high oleic soybean oil, mainly used in the mining industry, because obviously you need something fire-resistant. You don't need a fire in a mine. So these are a couple of the ones that are out there right now.
Really cool. Really cool, innovative stuff that's happening with the help of USB. We are focused on transportation on the Soy Checkoff Check-In this month. Tell me about USB and tell me about the investments that USB is making and soy's contribution to transportation. And I guess we got to talk about how soy fits into the infrastructure, right?
Yeah, it's a little more than just our, rail, river, and road that we're investing money in. If you look at the whole picture of it, we're dealing now with, and Iowa was involved in this, the high oleic oils and for binding agents and asphalt. So it's not only the projects that we funded, say in New Orleans, the port there, Grays Harbor, Pacific Northwest. We're looking into other ports too in Houston, just trying to have some alternatives for our, global demand to be shipped out of here. But it comes down to, biodiesel. Put it in the trucks that are actually hauling the soybeans. The commitments we have with Goodyear Tire. The trucks are rolling on the soybeans, so to speak. Yeah, there's so many investments that we're dealing with right now in the infrastructure.
Well, okay, it's rolling on the tires that are rolling on asphalt that's made with soy, right?
Yeah, it's pretty much, if you want to look through a life cycle analysis, it's soybean from start to finish, basically, no matter how you look at it.
Yeah, man, that is very cool. All of that investment and as I said earlier, the innovation. Patrick, where can we go to learn more about what's happening at the USB?
We have a website, unitedsoybean.org. There's things that come up on that. There's many websites. We're on Facebook. We're on YouTube. Basically, any of your social media platforms that will have any information about what we're doing. Not just infrastructure and connectivity, but all the projects that we're funding and involved with at the moment.
Very good, Patrick. Hey, thank you so much. That is Patrick Giberson, Soy Checkoff farmer leader from New Jersey. Thank you for listening to this edition of the Soy Checkoff Check-In. As Patrick said, go to unitedsoybean.org for more information on what's happening at the United Soybean Board. I'm your host, Chip Flory. Now, let's get back to AgriTalk.
Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. If the world is your oyster, we've got pearls of wisdom on AgriTalk.
Well, volatility has certainly returned to the markets, whether we're talking about the grain trade, livestock trade, or equity trade. We need to talk about what is going on in all the markets and what it is telling us about the economy. And helping us do that right now, Bob Elliott, CEO and CIO of Unlimited Fund. Bob, thanks for making time for us. We sure appreciate your efforts, man.
Thanks so much for having me. It's been an exciting couple of days in the financial asset markets.
Right. So what are you learning from the markets right now? And I'm going to throw the treasuries into that markets. I'm going to throw the equities into that markets. Let's throw currencies into it. What are you learning? What are the signals?
Well, the biggest thing that has been going on is that equities in particular have had extremely elevated expectations, really from a combination of AI-related earnings growth expectations, to some extent pricing in a Trump victory in the fall, and then expecting a lot of interest rate cuts from the Fed coming up through the end of the year. And the reality is a couple of those different pieces have really shifted in the last couple of weeks, which has created pressure on the stock market. And as a result, we're seeing particularly very levered financial players, people like hedge funds who often take a lot of leverage in their positions, getting squeezed on their longs and having to sort of cut their entire book down, which is creating knock-on effects across the financial markets, whether it's in the interest rate market or in the currency markets.
Okay. So what's the most important signal that you're pulling from the markets about the economy? Because I mean, they're throwing the R word around, the recession word around really easily right now, Bob. I don't know if I'm seeing any signals in particular from any of the markets really that would support we are in a recession kind of attitude.
Right. I think that's right. When you look at what's going on in the stock market, I like to say that stocks have an expectations problem, not an earnings problem.
Okay.
And since earnings are driven by growth, the fact that earnings continue to be pretty good. We're seeing, this earnings report season about 10% earnings growth year over year. That's a pretty good number, and is reflective of the fact that the economy, the core real economy, is doing okay. It's doing pretty well. It might be slowing a little bit from where we were a year or two ago, but it's okay. And the real problem is in the equity market is that the expectations were for something like 20% earnings growth, and that gap is creating the pressure on stocks. So when you're thinking about the real economy continues to chug along pretty well across most measures.
Yeah. Okay. So where is equity pricing right now? Are stocks overvalued, undervalued? What is it?
Well, stocks continue to price in relatively high earnings growth expectations over the course of the next year or two, really related to that, the expectations of benefits from the AI dynamic that's going on in the economy. Yeah. And so they're pricing in something like 17% earnings growth over the course of the next 18 months on an annualized basis. That's a lot when you think about, the core economy sort of is growing at 5 or 6% nominal. And so earnings expectations of something like 17% a year, that's very high. And not to mention the fact that the multiples that are being put on that, so how much people are paying for those earnings, are really near almost 2000 level highs. So the equity market is really is pretty disconnected from the fundamental real economy, which is modestly slowing in response to the Fed's tightening, but still, pretty strong labor markets, pretty good income growth, pretty good manufacturing growth, pretty good services growth. You put that all together, that's a pretty good situation for the real economy.
Okay. All right. We're going to come back to that in just a moment. But first, since last Friday's employment report, the 4.3% unemployment added a smaller than expected 114,000 jobs. Has there been any notable change in how money is being distributed by investors since that report?
Well, I think the sort of knee-jerk response to that report was expectations, was basically money flowing directly into the bond market and bringing bond yields down on expectations that the Fed would cut pretty aggressively. And right now, expectations are about 75% probability that the Fed will cut 50 basis points in September. And the expectation is that they're going to deliver something like over 100 basis points of easing, or about 4 cuts in total through the end of the year. That's pretty aggressive unless you think the economy is going immediately into recession. I think some of the issues with that unemployment number from last week, there's some seasonal issues. There's some issues related to the hurricanes and some weather issues that caused folks to be temporarily laid off. And so it probably overstated the weakness in the labor market relative to other indications that we have of what's going on.
Okay. All right. 75% chances for a half-point cut in September. Does that make sense to you?
Well, I think it's going to be, for the Fed to move that aggressively, they've got to see a real, a significant deceleration in the real economy. And so far, sort of aggregate measures that they're looking at, outside of maybe just the narrow unemployment rate, really don't align with that. I mean, we still have real GDP growth that's growing in the range of 2 to 3% a year. That's enough to keep the economy humming along. We're also seeing, continue to see income growth at the economy-wide level. Household income growth continues to be 4 to 5%, also sort of enough to keep the economy humming along. And so the Fed is not going to be reactive to, calls for emergency cuts and, extreme views that get priced into the short rate market. They're going to be looking at the data that comes in, and they've got a couple more data points around employment, a couple more data points around inflation. And, if those are largely what they've looked like over the course of the last, say, 6 months, the Fed may cut 0.25%, but they'll really struggle to justify cutting as much as what's expected in the market.
Yeah, I think that's going to be a struggle as well. And all this talk that they are going to meet before the scheduled meeting, which I believe is September 17. Is that? I think that's right.
Yeah, in mid-September, exactly.
Yeah,
yep.
Mid-September. But the idea that there was going to be an emergency meeting to cut interest rates before that, I just thought, man, oh man, the expectations are getting a bit out of whack. Okay, so if you could, and maybe you can, I don't know, if you could sit with Fed Chair Jay Powell right now, what would you tell him?
Well, I think this is the Fed really recognizes this as a challenging point, which is you don't want to be too late in terms of delivering cuts if the economy is slowing rapidly. Yeah. But the real risk is that the Fed cuts too quickly now, and we see a reacceleration, an unsustainable reacceleration in the economy, which creates a support to inflation. And keeps inflation above the Fed's target. Because the big picture is, for a Main Street focused Fed, the thing that matters the most is inflation. If you go look at surveys, people are still highlighting every time that inflation is the biggest problem in the economy today. And so if the Fed cuts too quickly and caves to essentially, coastal finance interests to support stock prices, it could very well keep that inflation problem embedded in the overall economy. And so that's what they really need to be concerned about. And I think they recognize that, at least the rhetoric. They've certainly moved a lot slower than what the finance community would have wanted so far this year. And we're likely to see that continue.
It sounds to me like you're fairly comfortable with the pace that the Fed is on.
Well, I think that's right, because when you look at the overall economy, things are pretty good. And even from a labor market standpoint, we've had a bit of softening in the labor markets. But in some ways, that's actually probably a bit of a desirable softening. It's mostly come from new entrants coming into the labor market. So if you look at, for instance, the share of people who are sort of a prime age workers that are working, that's at 25-year highs. That's a good thing. That's a good thing for the economy. You want to see that, is to get a little easing off of wage pressure as people come into the labor market, both folks, native-born folks, as well as folks who are coming in from abroad, helping loosening those labor markets, particularly in the lower income cohorts that have been very, very tight to find labor, which I'm sure people have experienced. That's a good loosening. That's a desirable experience, and overall, the economy is going. That's a pretty good outcome for the economy if we can get more people, a greater share of the population employed at with some loosening, so it's a little easier to find the labor that you need. That's kind of an optimal situation, and that's happened with interest rates where they are today. The real risk is cutting interest rates to juice the economy from here and make it run too hot, which causes those inflation pressures.
Gotcha. I've only got about 30 seconds, less than 30 seconds. I just want to say the ag sector is struggling. We've got our net income is down and down sharply from a year ago. They're looking for some lower interest rates to spur some investment in the ag sector, Bob. So we don't want to create any false hope, and you're helping me do that by taking a look at the economy and understanding exactly what is driving it. So thank you. I appreciate it, man.
Well, thanks for having me.
You bet. Bob Elliott, CEO and CIO of Unlimited Fund. Davis and I will be right back.
We don't make the news, we render it. AgriTalk.
And welcome back to AgriTalk, everybody. Your pal Davis Michelson here with Chip Flory to wrap up the show this morning. How's it look over there in the Mile Wide City?
It's looking
good. The
sun
kind of came out here.
Yeah, it's still cloudy. It's still just 70 degrees.
Okay, all right.
Yeah.
Yeah, we're still hanging in at 75, but the rain let up just a little bit. So there you go.
Okay.
Now you know everything. Good talk with Mike Miner. Terrific crop report. I don't know if there are necessarily any humongoid surprises in that conversation. Maybe you heard some that surprised you. Minnesota, variable. I think you called that quite a while ago.
Well, the expectations for most of the Corn Belt are very high, very high. You've got to carve out southern Minnesota. You've got to carve out some areas in northern Iowa. You've got to carve out some areas in southeast South Dakota, which is going to make it hard on Crop Tour, Pro Farmer Crop Tour, when we get out there, because we only do southeast Minnesota. So we need to gain a better understanding of what is happening north of the tour areas to have a real good understanding of what is going to be going on in South Dakota this year. But, yeah, that's the area, southern Minnesota, southeast South Dakota, and in parts of northern Iowa. It's really day 4, well, a little bit of day 1, okay, and then day 4 of the crop tour is what's going to tell us, is going to get us into those areas that are going to be swings. Outside of that, I think the expectations are that we're going to be into good crops, and that's what Mike was talking about, good crops.
Yep. You know, I wanted to try and find a chance to say this yesterday because it is my turn. But sometimes acreage can go down and yield goes up because you lose some lower producing acres there. Have I said it right, Chip?
I think you have. Yes.
Okay.
Yes,
No
very
more
good.
explanation needed. Yeah. Acreage can go down, yield can go up. Yeah, it
Yes, it
makes
can.
sense if you think about it. Bob Elliott talking some hard economy stuff here.
Mm-hmm.
A half a point cut would be too aggressive in September. What are we at? 5 to 5.5% is the rate currently right now. The Fed funds rate.
I think so. Or is
Somewhere
it
in the
5.25 to 5.5.
Yeah.
Yeah.
Haven't we been looking for them to get a little aggressive though? I mean, at 5, we got some room. There's room.
Hey, the market is definitely looking for the Fed to get aggressive. Now, here's the reason why I keep having Bob on. Because he's given us some really, really good guidance on what to expect from the Fed.
Yep.
So many analysts are allowing politics into their views. Okay. And I don't pick that up when I'm talking with Bob, because if you talk to one that leans to the Biden-Harris administration or the Harris-Walz campaign, they're going to talk about how great things are. I mean, you talk about some of the economists that come out of the White House, and they're talking about, look at this fantastic jobs growth. Look at what has happened here. Look at what has happened there. Oh, everything is pointed in the right direction, but doggone it, groceries are too expensive and we need to get interest rates down. What?
What?
How does that work? That doesn't make a whole lot of sense. Then on the other side of the equation, you hear all these, we're already in a recession. And one of the things that you and I have been talking about that is really difficult to measure is the affordability index. Now, affordability still stinks, okay? But I am willing to look at the data and say, but the economy is still growing, is still moving along at a pretty decent clip. Look at what has happened to some of the average hourly earnings. Now, our affordability is improving on average as we move forward because the inflation rate is now below the rate of increase in average hourly earnings on a monthly basis. So that is helping to improve affordability, but it's happening very slowly. It doesn't explain to us a lot about what is happening with an insurance rates, what is happening with general costs of living. I filled up at the gas pump. It's still $3.40 a gallon. It's too damn much for a gallon of gas for what we get in return from it. That's too much. So some of the factors that are many times excluded from inflation measures are adding to the inaffordability of today's economy. I know that. I understand that. And I understand the difference between the sectors, the general economy versus the farm economy. Farm economy is struggling. I didn't believe that it was going to be a major issue in 2024, and that it was going to be a bigger. I thought the real issue would hold off until 25. I don't know if that's the case anymore. I think the financial struggles in agriculture are here for the second half of 2025, and they will carry through into 2025. I just don't see any way around that right now. Would lower interest rates help the farm economy? Yes. I don't think there's any question about it. Is the general economy weak enough to accelerate cuts in the inflation, in interest rates? No. I don't think the general economy is struggling enough at this point. Interest rate cuts are coming. I think we're just going to have to wait for it a little bit longer. Ed Usset, from University of Minnesota is going to be joining us this afternoon. We'll talk commodities and the outlook for the grains right here on AgriTalk.